Hey everyone, this is Kirk here again at OptionAlpha.com, where we show you guys how to make smarter trades. And today we're going to go over all of the trades that we made here today on Thursday, August 21st. It's actually a fairly busy day as far as opening trades. We've not been able to get over the last couple of days a lot of opening trades on, so I felt good that we got 3 out of the 5 orders that we had working on. We had some other orders working that we just didn't quite get filled, one in silver and then another tech stock that we were looking at. So we're going to try to fill those ones tomorrow, obviously, before the end of the week. But feel good about these trades. Directionally, I'm a little bit bearish on the market at this point, and that's just short term. So I think we've come too far too fast as far as a lot of things are concerned, and some of that is reflected tonight in the trades that we'll go over. But again, a lot of things that we still have are working in our favor, so we were well positioned for a bullish move in the market, which we're getting. And so now we've got to start kind of rebalancing our portfolio just a little bit as we start taking off some of those bullish trades and start getting maybe a little bit more bearish and getting some negative delta in our portfolio. It's just getting a little bit too aggressive on the bullish side. So we've got to kind of even that out with some of these trades. So the first trade I want to go over tonight is Home Depot. So Home Depot is one that is really just a pure directional trade that we're making in Home Depot. So what's funny about Home Depot is that it had earnings, so it had a huge spike, and Lowe's is another one that's had a huge spike after earnings as well. But I think this thing has just gone very far too fast. And again, not to say that it can't stop going higher, I just am going to play a little bit of a down move in Home Depot. So I don't expect this to be a very long-term trade, although if it does end up being a long-term trade, we went out all the way to October because we got almost the exact same pricing in September and October for this spread. So why not go out the extra time, give yourself more time for room in this spread to move in case it doesn't move against us, or in case it moves against us right away. So with Home Depot, what we did is bought the 92.5 and sold the 90 puts. So again, bought the 92.5 and then sold the 90 puts against that. That still created a debit of 120 on each of these spreads. Now look at the chart here of Home Depot first, and that's the Analyze tab, which we'll look at. And again, you can see that Home Depot has made a pretty monstrous move since its earnings. And even after earnings, it's continued to move higher. But again, I just feel like at some point there's going to be some profit taking. I mean, imagine all the people who have held on and have the stock price all the way down here in the lower 80s and the upper 70s, now seeing the low 90s in stock price for Home Depot. There's bound to be some selling that's going to take place. And that's what we're playing. We're playing a sell on Home Depot. Basically, our line in the sand is right at where the stock is trading. And all we need is for Home Depot anytime between now and October expiration, which is all the way out past where our charts even go. We just need Home Depot at some point to close below this level or start trading below this level. We get an opportunity to take a profit, we're going to take that off the table. As far as the Analyze tab is concerned, this is what our profit loss diagram looks like with Home Depot. You'll notice it's a risk-defined trade, so we're capped on the upside and we're capped on the downside. So if Home Depot does continue to move higher and we don't make any adjustments, we're capped at our max loss of about 240 on this trade, max gain about 260 on this trade. What I like already about this spread is that you'll notice that we enter this spread with our break-even price, which is right here in the red, above where the stock is actually trading. So the stock is actually trading right there on that dotted red line down the middle of the screen, right at 90.96. So we have a little bit of intrinsic value here, meaning that the stock actually can go just a little bit higher and we still actually make money on this trade. So this is a lot better than trading, say, like a long put spread that's out of the money and you trade something like the 90 or 89. You actually need the stock to move down before you even start making money on the trade. So not something we like to do with our debit spreads. And of course, our debit spreads are always going to make up a smaller percentage and portion of our portfolio, but we can get a little bit directional here and there. So that's kind of the gist on Home Depot. As far as SPY is concerned, it's the same basic thought process, only we went just to September. October premium was just too much, and if we need that, we can obviously roll out to October if that becomes a priority. But again, just trying to get very negative deltas into our portfolio, and a good way to do that is with SPY. We went ahead and bought the 200, sold the 199 puts, paid a little less than mid price, which is mid price we usually try to go on around 50 cents, paid a little less than 50 cents at 47 cents. That puts our break even right about 199.50 and gives us a lot of short exposure to the market should SPY and the general market head lower. So same thing with SPY. You'll see just how rapidly this market has turned around. It's like non-stop straight higher. And again, not that it can't continue higher, it's just at this pace, I think that at some point we're going to see a little bit more of a down move just to see some profit taking. And then if we do continue, we do. But I'm just looking for this move right here. I just want a little bit of a move down in stocks between now and September expiration. Give us an opportunity to make some money in this trade. Now, right now, SPY is trading right at 199.50, so right at our break even. That basically means that anything below this point, and we'll have an opportunity to manage a winning trade. And that's what we're looking for. Shorter trades, getting some negative direction and delta in our portfolio that helps balance out the rest of what we've got going on. Okay, and then the last trade that we did is a calendar in USO. So we don't obviously want to make all these bearish trades. We also want to trade things a little bit bullish, right? And USO is one that's been beaten down and beaten down and beaten down. And I think that it's got a little bit of life that we could stop the bleeding, at least in USO, and possibly move just a little bit higher up to around 36, 36 and a half, somewhere in there on USO. So what we did is we did a long call calendar spread in USO. Now, the October-September here means that for the 36 calls, which is what we're trading, so on the trade alert here, the 36 calls is what we're trading for both October and September. We bought the longer term option, which is the October, and we sold the front term option, which is September. So again, we bought the long-term option, which is the 36 October call, and sold short the September option, which is the 36 call as well for September. So this gives us longer exposure for a longer-term option. So if the implied volatility rises in USO, if the stock jumps, we'll have a better profit in our longer-term option than we will on the loss side of our short-term option. So we're playing more of a calendar in time, right? We're playing different time zones against each other and not doing too much in actual strike price by focusing everything in on 36. Now we paid a debit of 25 cents on that, and I want to go to the chart here, the Analyze tab for USO, so you can see visually where this calendar spread will make money. And so here it is. Let me just expand it out just a little bit more for you guys. And you can see the stock is trading right now at about 35.09. Where we make the most money is right at 36. So if we actually end up pinning the stock, and we did a good job, I guess, luckily in that department last month with a lot of trades for August that we actually closed out of because the stock kind of traded right towards that near expiration. If we do a good job of pinning this stock right at 36, we can make about $250 or about $150, $160 on this trade. Now, ideally, it's not going to really happen, but we want the stock to close in the range of about 35 all the way up to 37. So this gives us a very big cushion and range for the stock to trade in, and we definitely are directional. So we want USO to trade a little bit higher, so we bought this spread just a couple dollars out of the money, meaning that we traded the 36 calls and the stock is trading at 35. So our 36 calls are both out of the money for both months, and therefore just a little bit cheaper for entry. Now when you look at USO, again, it looks almost like a mirror image of Home Depot, in that the stock or USO has just been absolutely crushed over the last couple of months. And at least for me, I think that at some point it's going to find some stability. It usually does, and these things become a little bit more cyclical in nature. But our window of profit is now anywhere between 35, right where the stock is trading, and about 37. So you can see we've given the stock a lot of room to move higher. Ideally, we want it to close somewhere around 36. That would give us the biggest bang for our buck, if you will, the biggest return, but we still have this huge profit window between 35 and 37. So really good trade. If it continues to move lower, it's only a $25 debit investment, so very small investment for what we actually could potentially make on this trade. Very good trade, and I like the odds because implied volatility is very low for USO, so if we get any more turmoil in the Middle East and oil in general starts to explode in volatility, even an explosion in volatility in this could create a profit for us without the stock even moving. So I like the calendar spreads for oil. Definitely something we traded before and done well on the put side, and now we're going to do stuff on the call side as well. So as always, I hope you guys enjoy these videos. If you have any comments or questions about these trades or any of the trades that we make, please let me know. Add a comment right below this video. I'll get back to all of those tonight or tomorrow before the open. And if you're watching this video online somewhere else on YouTube or elsewhere out there on the internet, then you just have to understand that you're actually getting this video and seeing all these alerts about 15 days after they're sent out to just our members. So the only way that you can get these alerts and this video the same day that we make those trades is to sign up at optionalpha.com. As always, happy trading.